I'm the animal at the head of the pack.
You try.
Okay,
yeah.
I generally am. Yeah. And like I said, I either get eaten or I get the good grass.
David Tepper owns 35 stocks in his $5.6 billion portfolio at Appaloosa Management. In this video, we're covering his top 10 biggest stocks, starting with number 10, NRG Energy. Tepper is the only investor in NRG Energy with a $200 million position. It makes up 3.5% of his portfolio. He's had a long history with this stock, but he's been buying for the last 3 quarters, and its stock price has recently shot through the roof. NRG is the $31 billion company that's one of the largest retail energy providers in the U.S., having over 6 million customers. They're one of the largest independent power producers in the U.S., primarily based in Texas. Right now, their stock has a $31 billion market cap, and it's trading at its all-time highs. With this huge recent run-up in their stock price, they're trading way ahead of nearly all of their fundamentals. And this is why a GF value comes in at significantly overvalued, pricing it at only $54 a share. That's down 2/3 from their current stock price. David Tepper is an American billionaire investor, hedge fund manager, and philanthropist, widely regarded as one of the most successful investors of his generation. Born in Pittsburgh, Pennsylvania in 1957, he earned a bachelor's degree in economics from the University of Pennsylvania and an MBA from Carnegie Mellon University. Tepper began his career at Republic Steel and later joined Goldman Sachs, where he specialized in distressed debt. In 1993, he founded Appaloosa Management, a hedge fund known for its high-risk, high-reward investments in distressed companies. Tepper gained significant recognition for profiting during the 2008 financial crisis by investing in distressed financial institutions. In addition to his investing, he's the owner of the NFL's Carolina Panthers and the MLS's Charlotte FC. Tepper's also noted for his philanthropy, including substantial donations to Carnegie Mellon University, leading to the naming of the Tepper School of Business in his honor.
If historically I can look behind me and I see, well, there's other animals following me. They don't necessarily follow me that fast. Sometimes there's no other animals around when we do things.
Tepper's 9th biggest holding isn't a stock. It's the iShares China Large Cap ETF by BlackRock. He has 3.6% of his portfolio invested in that right now, although he trimmed in the last quarter. Tepper's been in this ETF since the first quarter of 2024. Since then, it's up more than 50%. With 53 holdings focused on the large cap stocks in China, it has major weightings in Alibaba, Tencent, and Meituan, among many other companies. Stock number 8 in Tepper's portfolio is Uber Technologies, ticker symbol Uber. The $192 billion rideshare giant is priced at its 52-week and all-time highs. 8 super investors own Uber, and Tepper's the second largest. Uber is also a new huge 18.5% position from Bill Ackman just this quarter alone, and Tepper more than doubled his stake in the company as well. That's great timing as their stock price has climbed a ton since the beginning of the quarter. Tepper's owned Uber dating back to the second quarter of 2021, and he's added to it for the past 2 quarters. Despite its increases, the stock looks like it's ahead of its fundamentals. That's why a GF value only comes in at $65 per share, which is 42% down from their current stock price. Tepper's 7th largest stock is Vistra Corp, ticker symbol VST. 3 super investors own this stock, and Tepper and Stephen Mandela of Lone Pine Capital have roughly a 5% holding. Vistra is also one of the largest power producers and retail energy providers in the U.S. They supply power for nearly 1/3 of Texas electricity consumers. Vistra has a $53 billion market cap, and it's priced just $30 below its 52-week and all-time highs. Again, with the huge boom for these Texas electricity companies, Vistra is way ahead of a $53 GF value. Stock number 6 is Alphabet, parent company of Google, with its GOOG shares. The $2 trillion search giant behemoth is between its 52-week high and low. Tepper has a 5.6% holding in Alphabet, and 26 other super investors own the company, making it the 3rd most owned super investor stock. Li Lu, Triple Front Partners, and Pat Dorsey all have more than double-digit percentages of the portfolio invested in the company. Alphabet's valuations may look the most attractive compared to its fundamentals. They're priced below their median sales numbers, they're below their earnings, and their DCF based on their free cash flows. Today, their GF value comes in at $177 per share, which is up $10 from their current stock price. This may be the only Mag 7 stock priced below its GF value. Stock number 5 in Tepper's portfolio is Meta Platforms, ticker symbol Meta. The $1.6 trillion social media giant is down $100 from their 52-week and all-time highs. though this has rebounded nearly 7 times from their lows back at the end of 2022. Meta Platforms is owned by 24 super investors with more than 15% of the portfolios of Pat Dorsey, Chase Coleman, and Rob Vinall invested in the stock. David Tepper comes in lower down the list at 5.7% of his overall portfolio. Meta right now is priced at their historical sales numbers, and they're right at the top end of a DCF based on their cash flows. They're below this on an earnings basis, but well above a Peter Lynch value or their projected cash flows. Those factors combine to give Meta a $464 GF value, which is 38% lower than today's stock price. They may be significantly overvalued despite a huge rebound from the end of 2022. JD.com is next at stock number 4 in Tepper's list. This is the $51 billion Chinese e-commerce giant that's trading in the middle of its 52-week high and low. Tepper is the largest super investor in JD with a 6% holding among 5 other super investors. He had been buying the stock 4 quarters in a row until trimming 2 million shares in the most recent quarter, with an average buy price around $30 a share. JD still looks super attractive compared to its fundamentals. They're way below their projected free cash flows and even trading below a gram number. Needless to say, that's well below their median price to sales as well. Still, there's a ton of competition in Chinese e-commerce, and their returns on capital haven't always been great. Nevertheless, their GF value comes in at $41 per share, which is 17.5% above today's stock price. Amazon.com is the 3rd biggest stock in David Tepper's portfolio. The $2.2 trillion e-commerce and cloud computing giant is trading in the middle of its 52-week range. Tepper has 8.6% of his portfolio invested in Amazon, which is owned by 24 super investors. Josh Tarasoff and Alterac Partners have around 20% of their portfolios invested in the company. Historically, price to sales has been the only screenable number for Amazon. That's more an artifact of historical reality, not necessarily indicating anything or anything to base an investment on. Today, Amazon's trading slightly above this. And with potential slowdown in their growth as they become a larger company, their GF value only comes in at $170 per share, which is down 21% from their current stock price. Then the second biggest stock in Tepper's portfolio is PDD, ticker symbol PDD. Pinduoduo is the $42 billion Chinese e-commerce company behind the namesake app and Temu. With a stock price of $118 per share, it's in between its 52-week high and low. Pinduoduo is owned by 6 super investors with a new 17% position from Norbert Liu. Tepper has a 9.3% holding in the company, and he trimmed in the last quarter. That stake's worth more than $500 million, and he's bought or sold this going back 8 quarters in a row. Today, Pinduoduo is trading above their projected free cash flows and ahead of their gram number, a more conservative way of valuing the company, though their lows are around that number. The company suffered from some of the tariff shock, but there's a lot of growth being priced into the company with a GF value of $206 per share. That's up 43% from today's prices. And now it shouldn't be a surprise that David Tepper's number 1 biggest stock position is one of the most controversial stocks in the entire market. That's right, it's Alibaba, ticker symbol BABA. The Chinese e-commerce and cloud giant has a $296 billion market cap, and it's rebounded significantly from its 52-week lows. Today trading $20 below its high. Tepper has 22% of his portfolio, worth a $1.2 billion position invested in the stock. He's had a holding in Alibaba going back the last 8 quarters, although he significantly trimmed 25% of his position in the last quarter alone. With an average buy price of $81 a share, he's up more than 50% on his holding. Baba's numbers still look strong, being priced slightly below their projected free cash flows and way below their historical median price to sales. They're also around $30 above their gram number. Still, though, this is a stock that's been down in the dumps for more than 3 years. Partly because of that, their GF value only comes in at 100, and muted expectations for their future, there's only a $101 GF value for the company. Now, the big news for Tepper is what doesn't show up on his 13F. The largest position by far is a 30% put option on the S&P 500. This may indicate a notably cautious or bearish stance on the broader U.S. equity market. It suggests that Tepper anticipates potential downside risks in the market, but it just may be his way of hedging. That may be normal for some other hedge funds, but Tepper does have a reputation for making strategic contrarian bets, especially during periods of market uncertainty. It's important to note that Tepper's investment strategies often are dynamic adjustments based on evolving market conditions. This may be a proactive approach to risk management to safeguard his portfolio, but it also could be a bigger bet. If you found Tepper's investment strategy as fascinating as I did, make sure to like, subscribe, and hit the bell so you don't miss our next breakdown. Drop a comment with your take. Is Tepper smart hedging or is he calling a crash? And I'll see you in the next video.